Alright, good morning, guys. We're not looking to rush to get in here. It's going to be a very large, very large range day. Including yesterday's high, which is 580 points away. That isn't impossible. By 4:59 p.m., we could most definitely do that. I'm thinking Friday will take out this high. Waiting for an entry opportunity. Could have went long right here, stopped below here, but I'm not looking to rush in. Keep in mind we still have the 9:30 opening I'm currently just waiting 15 more minutes for the 9:30 opening. Yeah, I could take a long here, but time is the #1 ingredient to success and consistency. You don't want to be that guy that thinks you can just trade it any time of day and have consistent approach. In the meantime, I'm gonna go grab a phone charger really quick. We're waiting for the. Let me annotate. All right, I will be right back, guys. Currently waiting for that 9:30 opening. Keep in mind. Keep in mind, guys, we could be just trying to rush into here, hurry up and get an entry, but yeah, this is very clean. I wasn't really present at the moment. Telling you and I promise that 950 to 1010 will yield a very good setup. Sometimes even that 10, 20, 30 minute time frame can make a big difference. As you can see, in London we took buy side, we came, ran sell side. The elephant jumped in the kiddie pool, left a huge statement. I mean that alone's 100 points, just right there. That order block alone is 100 points. So that low will stay intact. This low will stay intact. And I see it pretty much just up from here. Lowest I could see is it taking this low out. Thinking that this fair value gap right here, not more so that I'm scared to get in before 9:30 and 9:50. More so just I've had the experience of getting in early, and more times than not, it's there's days it'll just fucking rip. It'll just go in your direction early before 9:30. Here, take profit. Like right here, if you were in right here and you already got out for the day, before 9:30, you get like that sell side of the curve. And at 9:30, you get that buy side of the curve. This is our new day opening gap. It's very small, but what I really want to see is it in some form, whether it takes this low, then goes higher, whether it respects this whole candle, then goes higher, respects this inversion fair value gap, and goes higher. Whatever it does, regardless, I'm most likely going to take a long right here. I want to see it come up inside, retesting on like the 1 minute, and that's where I'll take my long position from. I'm telling you in advance, so don't be surprised when it happens. I mean, it's only up from there. This is going to be a large range day. I mean, this is only the 5-minute chart, and there's 300 points available just from this. This is going to be a very large, volatile range day. We've already taken sell side twice. Now, inside a buy side. This is more like an internal buy side. This is the buy side that we really want, which is also our breaker. And our breaker's aligned exactly with our new day opening gap, because London used that new day opening gap to go short, as you can see. Right there's 459 to 6. Patience wins it all. All right, we have 3 minutes, really 2 minutes now until the 9:30 opening range. Note we've taken buy side. Could come back for this fair value gap right here. Very well could come for this low. Could easily come for that low. I'm at least looking for it to come to this fair value gap though. There you have it, coming lower. It's currently 9:29. 9:30 opening range is upon us. Yeah, I think I'm gonna rip that low right there. Right here's a nice optimal trade entry. The fair value gap beside it. Disrespected that 1 minute fair value gap. 9:30 opening range. South side looks like it'll be taken. Go ahead and go long here. Risking 0.3%. My second entry would be that one I was anticipating further on, that breaker. Alright, 0.3% loss. What I really wanted to see it do was rip that low, stay inside that fair value gap, and immediately run higher. Small paper cut, 0.3%. Very, very small paper cut. Right now, I'd only feel comfortable taking a long entry right here, which is also an optimal trade entry. So just around that midpoint of the optimal trade entry, inside this fair value gap. .2% risk. 0.28% risk. But as you see, we just tapped into that fair value gap, which is also our optimal trade entry. From that entire range of that 8:30 release to now 9:30. 9:30, we got that sell side of the curve. Heading into 9:50, I want to see it create that buy side of the curve. As you can see, we're already up more than our little paper cut loss. That doesn't mean shit, like that little paper cut size loss. We're staying in leverage. We're not looking to add on 5 contracts. Typically, we'd respect this whole candle. I think we're volatile enough that I can respect the low of the fair value gap. That's just a little bit too much risk there for me. And I'm okay with taking another small paper cut. Alright, and now you guys see what happens if you trade before 9:30. 2 small paper cuts. Yes, it's a paper account. That means very, very small paper cuts. And that's what happens when you trade before 9:30. So someone did that for a reason. Obviously I don't want to take a loss, but we're now gonna wait 13 more minutes for 9:50 macro. We could actually wipe this low. This is our daily fair value gap. Accumulation, manipulation, distribution. In the 9:50. 13 more minutes. This low stayed intact. Once again, we're waiting for that 9:50 macro. 9:50 to 10:10. We took 2 paper cut losses for like 0.58% in total. We're gonna absolutely destroy that loss and overcome it. So even if this 8:30 red folder low is taken, I would not want to see. I mean, it's a big possibility. It could take this low as well, but I really wouldn't want to see it come any lower. Oh shit. Yeah. 5 minutes. See, that was just a bit too much risk for me when I was in there. It looks like it could respect the whole candle. I just wasn't really willing to risk 40 points. So what I want to see here, heading into 9:50, would be like a fair value gap. This is a displacement higher, showing willingness to push higher. But it very well could complete this market maker buy model, creating our turtle soup. Now, if it does that, if it comes lower, rips this low, and creates that turtle soup inversion fair value gap, that would be very lovely. You can see this volume imbalance was a very nice setup. Ran buy side, created that volume imbalance, just tapped into it just barely. Took sell side. So right here is what I wanted to see, that displacement higher, showing willingness to push higher. 10 minutes till 9:50. There's no reason to rush in. This is a very large range day. No reason to rush in. wait patiently for our next entry, especially since we took two losses. They're very small paper cut size, but you can just tell it's a very volatile day. Low resistance liquidity runs. This is one of the days that you want to be active. This is one of the days I'm willing to take more positions, for sure. I'm gonna try and get some more people in here to witness greatness. Keep in mind, greatness isn't only a winner. Greatness is everything that comes with it. Wins, losses, break evens. And just helping others, trying to find their way. As you can see, we were long in this fair value gap. I wasn't willing to put my stop below here. That's just too big of a stop loss for me. And from 30 to minute fair value gap. 7 minutes into our macro. If we dip into this 1 minute fair value gap, I would feel comfortable. It's like a 40-point stop. So if we come to like the midpoint, I'd feel comfortable putting my stop about here. Today's a mix of being on offense and defense. All you have to do is time yourself correctly, and your move will really just like rush in your direction. If we hit that midpoint, I'm going long. Long. We're gonna risk 0.4%. I'm gonna open up risk of just a bit. Try and respect that whole candle in this optimal trade entry as well. Keep in mind we are heading toward that 950 macro. It's in 5 minutes. So what I'd really want to see here to protect myself would be a push higher through this inverse and just run above, creating some type of displacement higher. Whether it's a 1 minute fair value gap or something to that effect. We very well could take a loss here. I'm not scared of it. I'm embracing it, you know? Currently in that optimal trade entry. Oops, wrong one. So yeah, we're currently at that sweet spot of that optimal trade entry. I'm gonna respect more of this candle. It's a very volatile day, so you can get deep retracements for sure. Currently risking 0.74%. And we're stopped out. Three small losses, totaling to 1.3%. We're still up 20%. Looking like we're gonna create that turtle soup heading into the macro. This is study my losses. This is exactly why you should wait for that 950 macro. Even if there's a 830 red folder, study my losses. See where I went wrong. What happened right here? Hit that volume imbalance. Wait here for one more very good setup. I'm not rushing in anything. I'm willing to take a fourth and fifth position. It's that type of day where you can get more reps in, you know, a lot of volatility going on. Thinking it's gonna complete that market maker buy model, sweeping that low. All right, so we're in the macro. 950 to 1010. Go back and study my losses. Didn't wait for 950 when clearly I said to do that. Before running higher. That would give me the most confidence in going long. And the best discounted price too. So we got that volume imbalance we're currently playing within. Remember, guys, your losses only define you if you're over leveraged. That's the only time they define you. For transparency's sake, I'm gonna show you guys. Here's our losses. Very small loss. Always wait for your macro. I mean, look what happened. Coming off that volume imbalance. Remember, guys, we're building good habits. We're using time to our advantage. If I would have took one less entry here, I'd be cool with that. But then again, it's 3 very small paper cut losses. You can't let them define you. The only time they define you is when you put too much risk on. Alright, guys. Currently is waiting for that low to be swept. Preferably with a fair value gap, so we can use that as our inverse. That's what I would love to see, is just yep. Massive run through with a fair value gap. And print it as the fair value gap. One more candle here, and then a run higher. So honestly, one more candle right here after running that low, and then the third candle, I want to see that run higher. So essentially a 1 minute swing low. We've got our turtle soup now. Got 5 seconds. So I kind of want to see this candle leave a gap open. Play around right here. We are approaching that silver bullet setup. So right here, I want to see this candle. Yes, that's perfect. So a low, a lower low, and I'm going to see a higher low come up inside of here, and I'll go long. I'm going to take off executions just till later. We've already seen the losses. But yes, this is ultimately the setup we should have waited for to begin with. So I want to see it come up into here. and then I'll put my stop below that low. So we're getting ready to go long here. I'm not gonna just rush into the long. I want to see it do what I said, come up inside of here, and it did not do that. It took the low. Make it red since it's sell side. So we've now taken the sell side on a larger scale than what we anticipated. We just wiped out that London low. We're diving deeper into that daily fair value gap, as you can see here. Could be heading for that midpoint, which I'll mark out here. I'm thinking it's heading for that midpoint of the daily fair value gap, which is very close. So I'm going to anticipate my setup derived around that. I'm looking to go long here at a very discounted price. Right here is the midpoint of that daily fair value gap. So we've taken sell side, turtle soup. Right in that midpoint of the daily fair value gap. Alright guys, so we're currently trading off this midpoint of the daily fair value gap. Show you here. The midpoint of this daily fair value gap, which is also a higher time. Here's the optimal trade entry on the daily time frame. So we're at that, just below that sweet spot here, coming to the daily fair value gap midpoint. Ran through the 830 low and London lows. So we've taken sell side on a larger scale. London already took these lows out. Below this 1 minute inversion. Risking 1%. That's a bit more than I would like to. Currently risking 1%. We have one contract on at the moment. It's one of them days where you kind of have to risk a little bit more. The range is just so large. I mean, even on a 1 minute candle, that's 20 points on a 1 minute chart. breathing room. 1.1%. Just so I can respect this order block here. So this third candle, we had a low, a lower low. I want to see a higher low here, or else our stop loss could get taken out. So I want to see a higher low, and then a run higher. And we did not get that. Another loss on the day. Tough day so far. It's hard to get in sync with such a large range. I'm going to take one more setup and that's it. Clearly, before 9:30, 8:30 open, took sell side, ran buy side. So clearly somewhere I was misaligned, and that is exactly what happens sometimes. The best of the best misalign themselves sometimes, but it's about managing risk, managing the trade once you're in it, and ultimately just so we've taken out that low of the 1 hour fair value gap. Put a line here. So we know this is over to the left, that's that 1 hour fair value gap below. So we've ran sell side again. At the moment, we've taken multiple losses. And why doesn't it define us? Because we manage risk. We're within risk. We're waiting for another opportunity to give us a valid risk to reward setup. In hindsight, that was a very clean setup. That right there was very clean. Optimal trade entry, inversion. Right here's our 4 hour fair value gap. I'm gonna annotate that here. This is us running 1 hour level of sell side over to the left. So right here, something that would give me confidence to get back in is if we printed a higher low, and had a candle trade within this inversion. Because at this point, this is a turtle soup setup. We've taken that sell side liquidity on a larger scale. So I don't want to see this push up here, one more candle print, come in here, put my enter long, put my stop below this candle, targeting previous highs from the New York session. As you can see here, we are down on the day. Multiple losses. We're down a little bit, around 2.5%. I'm willing to take one more setup, win or lose. I'll be getting off after that. So right now we are trading, disrespecting that 4-hour fair value gap. So we can get rid of that. It's not respected. We're still within that daily fair value gap. Right now we're at the 79% level of this daily time frame optimal trade entry. Respecting that daily fair value gap. So this could definitely be where our long setup is forming. Running right into that 79%. And it looks like it's turning around right on the dime. Keep in mind, we do not want it to rip this low. This is our daily fair value gap low. We do not want it to come down there. Right now, this is our 79%. So this could be a crucial turning point. Go long inside this inversion. Stop below it. Find a spot that I can scale back in once we get further along. I'm gonna be aiming for. See, that's just greedy to go for that ultimate high right there. It will take it. I'm gonna aim more for like this one. But keep in mind, I'm taking partials along the way, so I might not even end up going to the full amount. I prefer for this gap to stay open right here. Respecting this inversion. Keep in mind, we're down 2.5%. Currently up 0.5%. Looking to mitigate those losses. And at minimum, come to a break-even day. I think we can overcome it completely and end the day in profit. Currently up 0.8%. Right off that 79%. So taking a lesson from my losses here. Waiting for that higher time frame optimal trade entry is definitely worth your time. We're now within that really nice silver bullet setup. We're not in the macro anymore, but in 30 minutes we'll be in that 1050 macro. Right here we've got a nice fair value gap. How's my risk here? Below this inversion and below this fair value gap. In 5 seconds, this will print. I'm gonna go ahead and take one more long here. Right in that 1 minute fair value gap. This is as well as an inversion. Currently risking 0.7%. Once we get a displacement higher, we're gonna mitigate our risk. So this next candle after this one, we'd want to see it push higher above this high. This candle right here. I want to see it push up above rather aggressively. Like this right here, whenever you're anticipating a fair value gap forming and then it prints into it, like the new candle opens into it, essentially, you can really always trust that. I've never really lost a setup like that one. So we're currently up 1.4%, 1.5%, 1.7%. And keep in mind, we're down 2.5% on the day. So we're pretty close here to mitigating our losses. Remember that this is a very, very volatile, large range day. So if you manage risk and manage your trades, it's pretty damn easy to overcome your losses. Here we're gonna go as close to break even as comfortable. If we keep this fair value gap open, I'm gonna go to risk free. It's looking like it's not gonna stay open. Oh, there we are. Stayed open. 30 seconds will tell it all. But yes, guys, we've taken 4 losses. We're embracing it. We're taking it to the chin. We're looking to at least mitigate it, preferably overcome it and end the day in profit. Because who doesn't like to be a winner? But yeah, we could have seriously blown up here if we didn't manage risk. Imagine somebody that's risking 2%, 3% per trade. So we've got that tiny 1 minute fair value gap. Very small, but it's there. Looks like we might dip into that. Create a swing low. Doesn't have to, it could stay open for sure. Keep in mind this is the inversion that we're looking to respect. Right here I'm gonna mitigate. Just blow that low. Right here we're getting ready to take buy side. I'll probably scale off something around like here. Keep in mind, we're only trading 1 to 2 contracts max. I could easily enter a third, fourth contract and run this account the fuck up, but I'm trying to stay composed, calm, collected, you know, and just really solidify my habits and my rules and show you guys that if you do that, this is all yours. This is a whole world that will open up to you. So please just manage risk, manage your trade. Don't let the losses define you by over leveraging. Right here we're dipping into that 1 minute fair value gap. See, like right here, I could have put a third contract on, but it's not really necessary. I'm already risk free. I trust my stop. We're getting ready to take buy side. I'm gonna scale out up here. So this is our London low. That's our 830 low. Taken out. This is our 79% retracement. Our massive turtle soup setup. This is a large range day, guys. This is, I mean, things are gonna get crazy up till the election here. I mean, seriously, it's gonna be a little bit wild, but we're gonna take something off here. I'm gonna take off half. Another 1.8%. Back up to 120. Come on, guys. As soon as this account hits 200,000, only trading 1 to 2 contracts, we're going live. We're doing evals, passing evals together. Feel free to do not use your bill money to purchase the evals. If you can afford to buy a cheap eval and you want to take these trades with me, feel free. Do not spend your bill money on it. Don't spend your last dollars, your food money. It's not gonna yield you your rent money. It's not gonna overcome your personal problems, or you and your girlfriend were arguing and you want to fix that. It's not gonna fix that. Fix yourself first. So we're currently up 100 points. Mitigate risk some more. So we've got 0.93% locked in, secured, which if we were stopped out, we'd still be down on the day. But about 1% loss on the day if we got stopped out. I don't think it's going to happen though. Alright guys, I'm going to probably take a bit more off here soon. Right here it's looking like we have that breaker, the fair value gap inside of it. We're going to take everything off just above these highs. So we've tapped into that breaker with the fair value gap inside of it, which makes it a very much more powerful algorithmic PD array. So the 5 minute here. So this would be our fair value gap on the 3 minute. Why? Why is this not it? It ripped this high right here. So we can keep that right there. Get a fair value gap higher, I'm gonna mitigate risk below this candle. Just above this high, I'm gonna take off another half of contract and then let the rest ride. Oops, wrong one. So right here is our Fibonacci retracement. We haven't even yet hit that fib. I'm gonna aim below that 79%. Alright guys, we got that fair value gap higher. I'm gonna mitigate risk. So if we got stopped out, there we go. Bam. Taking off another half contract. So what we're trying to do here is just wedge the market in between our stop and our take profit. Ultimately, it's gonna come up. This is gonna explode, especially up into the noon, 2 p.m. silver bullet. I mean, this is gonna come higher, up above, retest this new day opening gap. This is a very, very good move right here. It's just hard sometimes to find the bottom. As you can see, I got stopped out trying to find the bottom. Alright guys, we are quickly approaching our take profit. So please, please go back, review my wins and my losses. Once again, I want to see this inversion respected. Price push right into our take profit. So with our stop loss right here, we have mitigated all of our losses and we're in profit for the day, just with our stop loss. So once again, I want to see it continue to push higher here. Currently up 120 points. I'm gonna respect this 1 minute fair value gap here. I just don't want to get taken out prematurely for no reason, you know? Especially since we're already this deep into profit. Respecting this 3-minute inversion. And there we have it. Respecting that 1 minute fair value gap and that 3-minute inversion. Know when to lower your stop, but don't be too aggressive with it and don't continue to lower it. There's been times where I've been up insane amounts of profit and I lower my stop, I don't want to get stopped out. Really, if I just kept my stop and profit Alright guys, so as you can see we're up 120 points here, very large winner, but I want you guys to watch the stream recap and study my losses. I took multiple losses trying to find this bottom, and I review real time why I took the losses, how I'm going to overcome them, and yeah, just come check it out. Alright guys, we're currently up 130 points on the NASDAQ, approaching 140, about to take out buy side, and we've taken multiple losses on the way down here, trying to find the bottom, and I real time explain. Alright guys, that was just a little promo video that I was taking, but yeah, I mean, very successful stream today. I'm gonna wedge the market in under this fair value gap. Alright guys, we are out of the trade. Very, very successful day today. So we've mitigated all of our losses and we are in profit. So here's our paper cuts. It's our small paper cuts. And here's how we overcame those very small paper cuts. We're up 24% in 6 trading days, all while taking at least 7 losses. Let's just review it here. We're gonna do an account overview very quickly. Alright, so this is when we started the account. Started on a very hot streak. Took a decent sized loss. Overcame it and mitigated it. Plus 500 over it. Small paper cut. One very good winner that we scaled out 3 times. Some small paper cuts. This is from yesterday, the paper cuts. Break even. Paper cuts that we then mitigated. This is consistency. This is how we remain profitable. Yes, I got stopped out just before I take profit. I think it's actually going to take my stop and run with it. That's okay. I'm going to pull up the executions now. Yes, this is a paper account. It does not matter. Regardless, if you took these trades with me, you'd be making real money. It does not matter if it's a paper account at all. It means nothing. So right here we took 1, 2, 3 losses. Took a 4th loss right here, all small paper cuts. And then we went to our higher time frame to reanalyze, taking very major levels of liquidity right into our 79% retracement on the daily time frame. I'm going to show you guys here again. This is all the trades we've taken, so it looks kind of crazy. Let me get rid of it. Looks crazy, but once you go on the 1 minute, it looks pretty clean. So I'm going to get rid of the executions. So right here, we ran lower after 9:30, given that very nice run lower into our 79%, respecting this whole daily candle. Not just the fair value gap, but respecting the whole candle. And it's only up from here. This next 4-hour candle could very well just rip higher and higher. Especially tomorrow. Friday is going to take out these highs. Tomorrow should absolutely take out these highs. Executions again. Once again, Study my losses. Why did I take these losses? First of all, I took these ones trading before my 950 macro. Also misaligned with that run on liquidity. Did not foresee that happening. I was stuck on my bias of attacking buy side. Yeah, right here it looks like it took our stop just to go here to take profit, which I'm perfectly fine with that. In hindsight, I should have respected this 1 minute order block. But there's our take profit being hit. Over 150 points. 160, 170 points. No? Alright guys, well, our overall take profit has been hit, demolished. We saw our model, we executed, we mitigated all of our losses, and that's how you do it. I will not be streaming tomorrow. It'll be a very large range day to the upside. But I will be back Monday at, let's check the economic calendar really quick. So tomorrow there's 8:30 news. Right, Monday there's nothing going on. Tuesday we have a high impact news at right at our silver bullet. Next Wednesday, a lot of news going on. FOMC. So we'll trade at 2:30 then. I will not be trading until 2:30. Next Wednesday, next Thursday, we'll be back at 9:20. That 10 o'clock news. Next Friday is NFP. So keep in mind, guys, next week is NFP week. And then once again here, alright guys, well, there's nothing more that really needs to be said. I mean, took 4 paper cuts, mitigated all of it. So last one I'm gonna say, you saw it for yourself. Please feel free to go back and recap my wins, my losses. Especially my losses. You always want to study some of these losses, see why they're losing, so you can avoid it. Knowing when not to is more important than knowing when to get in. And I hope you understand what I'm saying. Knowing when not to is very important. Alrighty, well, thanks for tuning in, guys, and I hope you have a great rest of your day then.